Hello and welcome to BQ Prime. You're watching IPO Adda, and the company in focus today is Indian Renewable Energy Development Agency, IREDA. The company is coming out with an IPO which opens on November 21st, closes on 23rd. Price between 30 and 32 rupees per share. It's a fresh issue of 1290 crores and office of 860 crores, where the government of India is offloading some of nearly 10% of its stake. And joining me is Mr. Pradip Kumar, who's the chairman and managing director, and Bijay Mohanty, who's the director of finance of the company. Gentlemen, thank you very much for joining us on BQ Prime. Let me come to you first, Mr. Das. You're raising nearly 1290 odd crores. What is the kind of the deployment that you see for this money?
Yeah, very good morning, and thank you very much for inviting for this Suvan program. See, we are a pure play green finance company since last 36 years. And today, the kind of requirement of the sector, not only for business, but also for sustaining the environment, renewable and new sources of energy is going to take larger space. And we have been doing since 36 years. And if you see last 3 years, our growth has been quite phenomenal. There is a huge demand in the market, and we have the expertise of renewable energy financing in the country, being the largest pure play green financer. So we have a huge amount of capital requirement to augment the financing requirement, what is envisaged and expected from us. So we are going to deploy those in our regular business of financing to renewable and new sources of energy.
Mr. Mohanty, you have a gearing of 6 times, if I'm not wrong, for the first half of the year. How much of the gearing will come down post this issue?
I think we'll maintain a comfortable gearing ratio post issue of the equity.
What is the kind of leverage that you do, sir, when you say you're raising nearly 1290 odd crores? Do you leverage it? What is the multiplier that you use to leverage it?
It is 7 times.
So basically, roughly around 10,000 odd crores of lending that could be done over a period of time.
Yes.
See, sir, I'll just add to what Dr. Mohanty said. We can go up to maximum 8 times, but keeping at 7 will enable us to a healthy, stable rating. Right now, we are AAA stable. Our gearing is March 6.7, and we'll be keeping somewhere 7 and above 7, not suddenly go up to 8, which we can, but we have to see overall balancing of it. And if you see last 3 years, we have completely focused on not only business growth, but on best quality corporate governance standards. So we'll continue to sustain our AAA stable rating, which we have achieved 6 months back from AA plus to AAA stable straight jump.
Give me a sense of because you are a financial agency and you have been funding green projects, what proportion of your borrowings are in foreign currency denominations?
As of September, it is 25% forex and 75% domestic.
How are you managing that forex volatility which has come in? Also, the fact that foreign interest rates have gone up significantly, so there is a impact that comes into you because of the borrowing rates which will be benchmarked against the global rates. What kind of impact that will bring into your P&L?
See, around 81% of our forex borrowing are hedged. Okay, and if you look back 3 years back, we had 57% of our resource borrowing from forex, and 43% from domestic. Last 3.5 years, we have largely resorted to domestic borrowings. And the rate what we are getting in 2021, 22, and 22-23 is quite competitive vis-a-vis the landed cost of forex borrowing. Despite having a fair amount of line of credits available with us, despite paying the commitment charges, our landed cost was becoming, domestic cost was becoming cheaper. So we have resorted to that. Very recently, I think around a month back, as well as 2 months back, we had gone to market for raising bonds. 1.5 to 2 months back, we had raised around 1,000 crore at 7.63, and now 680 crore we raised just 3 to 4 weeks back at 7.75. So the rate has gone up in the recent past. But however, we'll try to maintain, since we have the line of credits, we'll be doing that arbitrage. So which one will be comfortable? And our ultimate objective is to ensure minimum borrowing costs so that we keep on supporting to our developers. Because extremely good opportunity of RE and new sources of investment going to happen in the country till 2030 at least. Forget about 2047 when we are planned to have a developed economy.
Yeah.
Even if you park that for a while till 2030, which is at least near future doable, visible, reasonably visible, fair amount of data is there. So we are quite optimistic. We'll be maintaining a healthy balance and we'll be resorting to post our IPO. We'll further review because we had earlier green masala bond from the overseas, which is matured now. And we'll again do the review. So all along in 36 years, since we are not listed, general public is not well aware of IREDA. And I'm very open to share in India, many times they get confused with IRDA. So post IPO, I'm sure IREDA will have in general known brand name, not only citizens of the country, but also the small developers in the country. And India being a largely agro-based economy, fair amount of small RE developers are going to come up in time to come, be it CBG, be it ethanol, be it other area. We'll continue to support them also.
On a lighter note, if the government comes out with more tax-free bonds from IREDA, they may recognize you much faster.
Fastest.
Yeah, much more faster, yes.
So future is renewable. And we have a tried, tested, trusted past. 36 years, we have done only renew and renewable business. And we have transitioned today, which is established renewable in the country. We have transitioned it from emerging 20, 30 years back. So we have that established track record of having the ability to translate the emerging RE to established RE. So definitely in the future, in time to come, government, not only government, even our developers, our investors, going to rely heavily on us to support again the new and emerging technologies to translate those into emerging to established.
Sir, if I look at your net interest margin on an annualized basis, it's around 3.6%. Is there enough room for you to take it up to above 4 or around 4?
Even if at 3.6, we are quite comfortable. If you see our PAT and other things,
I'm talking from a market's point of view, so that we get a good, better valuation.
I'm coming to that. See, definitely, we have already enhanced our interest rate from 1st July onwards. Our NIM has already getting improved, and the fair amount of reflection will be in the December quarter result. So there is quite fair chance of we further not only sustaining, improving in that. But in this point, I'll add another thing. When the investor is looking at NIM, they should look at provision coverage ratio also.
Yeah, it's at 48.1%.
Yeah. So if you are comparing NIM of IREDA with any other fossil fuel finance company, it may appear to be slight lower. May happen. But when you look at the PCR, we require 47-48% of PCR. Vis-a-vis 70 plus PCR in other fossil fuel financing company largely. Why? Because risk factor is more. So you need to make much more provisioning. So the bottom line will get impacted there also. Higher NIM coupled with higher provisioning coverage ratio, then your bottom line will get impacted. But in our case, it is different.
But you still have 20% odd exposure to state utilities. That's also very high risk.
No, let me be very clear on this. State utilities, we have 20%. Out of that, 10% is towards state distribution companies. And these loans, just 4 or 5 years back, it started. Actually, my ex-employer is REC and I was dealing with the state utilities then. So post my joining IREDA, I took a bit of initiative, and during particularly COVID time of 2 years, when we had sufficient soft fund with us, and they were at need. So we went on giving some kind of short-term loans. And this kind of loan requirement is not going to be there in the long run also. The reason is government has already come with a very specific additional reform guidelines with the support of two schemes, very major schemes, RDSS and LPS. And the result has already started yielding result, the impact of it. AT&C losses has already been reduced from 22 to 18. And cumulative outstandings of those companies, which were in the range of 1,35,000 crore, in September it has already come down to 67,000 crore. And more we progress and implement this LPS and RDSS, it is going to further come down. So what is going to happen? If the outstanding dues are coming down, that means the health of the distribution companies is improving. So what they will be doing? Either they will borrow on their own, or they will borrow from me or anybody with a very hard bargain. So that kind of NIM cannot be sustained, what we had in this space. And coming back to risk, see, so far in the history, these distribution companies, whatever loan they have taken, who has gone bad? Whatever ways and means. Finally, government came out, some schemes or other, support was given. And it was not only the distribution company's problem, it was the chain impact getting reflected in their balance sheet. So a holistic improvement in a very focused approach, entire system of development of RDSS, because once the entire system, network, cables, meters, everything will be in a smart mode, then one can easily identify the root cause of the problem. And then legacy issues like declaring subsidy and not making a budgetary provision, and then consuming by the government departments and then not getting the payments. So those are very focusfully addressed now. But you
so where is the so where is the then gross NPS coming in from? You have 3%, 3.13% of gross NPS. On a net NPA basis, 1.65. Where is the NPS coming in from?
See, when you are doing financing to the emerging sector, any sector you like, whenever the sector is emerging, fair amount of uncertainty will be there. And whatever you do, like you are driving a car, bit of scratch and dent is going to happen. But you have to have a system where accidents should not happen. So if we are a 36-year-old company, so far finance 1,07,000 crores as of September, and we have cumulative write-off only 203 crore. And when largely our loan book is private sector, and largely our loan book is towards emerging. Of course, now half of the sector is established, but others are emerging. If you see our March loan book, almost 62% is established area, 20% is coming from the state utilities, remaining 18 is purely emerging.
When you say emerging, it is like battery companies and others, or
I'm explaining. That is Satat scheme, new scheme came, the compressed biogas, just 1.5 year old, so 18-month-old. Ethanol, with a policy of government blending 10% to fuel. Now it has been revised to 20%. Till date, we have reached around 16%. Still balance 4% is there. Fair amount of investment is happening. And since 1.5 years, we have gone into it. Just think over any sector coming in 18 months, if it is a first time coming and we have supported, and 18% our book profile is coming out of it. And you are coming to storage and battery. We have energy efficiency project also, energy access project also. And we have modified our objectives to capture others like new and emerging green hydrogen, green ammonia in the time to come. And this offshore wind, pump storage, battery storage, etc. So right now we have started getting applications for the new space like green hydrogen, as well as this towards storage. So today our book is 18%. So in 18 months, if we have gone to 18%, and we have a strategic approach of having 50-50 balancing kind of thing, so that our asset quality balancing should happen. Establish 50 and 50 from this space, but subject to what are the prevailing market conditions. And we are proud, and it is a privilege for us to serve the country by playing a role of motherly nature as far as financing is concerned in renewable and new energy space.
Well enough, sir. Your IPO, which is opening on 21st and 23rd November, is priced between 30 to 32 rupees per share. It's a fresh issue of 1,290 crores and OFS of 860 crores. At the upper end of the price band, you're valued at 8,600 crores. It was a pleasure talking to you today. Thank you very much for joining us on IPO Adda on BK Prime.
Thank you. Thank you very
Thank you.
much. Good day ahead.
Thank you. Thank you, sir.